The theme for Q3 outlook is trade war, and that is what is on investors' mind these days. The current US government is very harsh on trade and has increased tariffs against China and recently Europe, Canada, and Mexico. And as a result of that, sentiment has soured significantly in equity markets. We're trading sideways, and our current view on equities is still to be neutral to defensive at this point in time. We've actually been defensive since February this year when we got the big volatility shock. And it's incredible to see how much equity markets have changed in just 5 or 6 months' time. We came into the year with a lot of high hopes for the global economy. We just got the US tax reform. A lot of stimulus was going to come through to the US economy. And what we have seen is disappointment in Europe and China, and recently also in emerging markets where we have a currency crisis brewing in Argentina, Turkey, and also in Russia. And in general, the FOMC and the Fed's interest rate trajectory, the normalization of interest rates, is really creating cracks in the emerging markets. And the governor of the Reserve Bank of India recently in an FT opinion piece said that you could have a double whammy in the emerging markets if we in 2019 get the toxic combination of widening fiscal deficit in Europe with a balance sheet reduction from the Fed. That would be a double whammy for emerging markets, and it could hit the global economy as a boomerang. And that's one of the reasons why we stay negative or defensive on equities at this point in time. We don't say you should go all out of equities, so you should still have some exposure. Keep it in healthcare, consumer staples, and then the non-cyclical part of the technology sector, which is predominantly software companies. These types of companies have low debt, so their interest rate sensitivity is very close to zero, and they all post interesting growth profiles. In terms of countries, stay for now out of the trade surplus countries because of the US trade stance. So that's the countries like Japan, China, Germany, Mexico, and Canada, and to some extent also South Korea. So stay out of those. So stay constructive on equities. Don't go all the way out, but position yourself to be defensive. It could be quite a volatile ride here in Q3.